Hello, everybody. So, if you're like me, you're probably sick of hearing about artificial intelligence. I know, sure, I am. Okay, I was going to use some vulgarity there, but I stopped myself. If you remember, maybe 5 or 6 years ago, there was this other artificial intelligence thing where it was really in the media and everyone was talking about it. It comes in and out of vogue. Now, this might surprise you. You can look for headlines from newspapers from the late 1960s, over 50 years ago, and it was the same thing. Artificial intelligence this, artificial intelligence that. Artificial intelligence is going to do this, artificial intelligence is going to do that. Artificial intelligence was, the name was first coined in the 50s, so it's been around for a while. And it comes in and out of vogue, and you know what? I'm not that smart. Maybe it's the way of the future, but I will tell you this. In terms of the markets, the funds that were developed that use artificial intelligence to make predictions have done really poorly. And sorry about that. Someone's ripping by my house on a motorcycle. Um, they've done really poorly. And this is because, in my opinion, artificial intelligence is based upon statistics and probability theory. And statistics and probability theory assume that people are rational human beings and they make rational decisions. And that's just not the case. So, anyway, all that being said, let's just take a look at NVIDIA. Now, I don't know a lot about artificial intelligence, but I do the markets. And sometimes the things come in, style or out of style or in vogue or out of vogue that can make stock market moves get overdone. For example, 5 or 6 years ago, anything that was had cryptocurrency attached to it would make the stocks really move. Well, company XYZ could come out and be like, "Oh, we're going to accept cryptos," and the stock would go up 50%, only to give back its gains within a day or two. So let's just take a look at Nvidia. It's pretty much what everyone's talking about. There's a chance it moves higher, of course. There's a chance it moves lower, of course. But the best traders let the market tell them what to do. Now, I've come out of the hedge fund world where I was for 20 some odd years. And I've learned that the best traders, they don't have preconceived notions. They let the market tell them what to do and act accordingly. So here's what we got to watch when it comes to Nvidia this week. This is just the year-to-date chart here. You can see it's made this big move higher. This 392 level is important, though. This is where there was resistance on Friday and on Thursday. What happens when something gets to resistance is if it doesn't get through it within a few days or maybe a week, it tends to start moving lower. Now, why is that? Well, resistance is a large collection of investors who are looking to sell at or close to the same price. In this case, it's 392. These investors start to notice, oh, the stock's not moving higher anymore. That means there must be other sellers coming into the market. So if I want to sell, I might need to reduce my price because the buyers are going to go to whoever has the lowest price, who wants to sell. If you're trying to sell 392 and there's someone who's willing to sell a 391, guess what? The buyers are going to go to the person who's willing to sell a 391. Sometimes the investors see that. Other investors say, you know what? I really want to sell this thing as a big move higher. I want to take my profits. I'm going to go to 390. The next person sees that. I'm going to 389, so on and so forth and so on. And you create this snowball effect, all right? Markets generally, 98% of the time, are not moving because of some fundamental reason or whatever they're talking about on CNBC. They're moving because of human psychology. Things get to resistance and they tend to sell off, and this is because of psychology. We have investors who want to sell getting anxious that they're going to miss out, so they reduce their prices and it becomes a snowball effect. It's a common thing that we see in all markets, okay? Now, here's NVIDIA 1 week chart. Notice 392 is this important level. This is where we ran into resistance or a large group of sellers on Thursday and on Friday. When a market's moving up, it's because there's not enough sellers or supply to fill all of the demand or buy orders. So buyers are forced to pay higher prices. They're forced to pay a premium. This forces an uptrend. When we get to a resistance level, well, all of a sudden the tide has turned. For some reason, there's enough investors who are willing to sell that they can fill or satiate all of that demand. And then, like I said, some of the sellers start to get nervous and they start to undercut each other, and we get this snowball effect. So 392 is clearly the important level to watch on the upside here. If you're not long NVIDIA, I would probably say wait, at least if it was just me. I don't think I would buy it here. I would wait for it to clear this 392 level, because what happens if something gets above resistance? This is what we call a breakout. Well, if a price trades above a resistance level, it tells us something. Every chart needs to be viewed through the prism of what does it tell us about supply and demand. If we get above a resistance level, it tells us that the investors who created the resistance with their sell orders are out of the market. They've finished their orders, they cancel their orders, regardless, doesn't matter. When you take supply or selling out of a market, it sets the stage for the demand or the buyers to have to pay higher prices, and this could force an uptrend. Now, notice how we gapped up. Well, there's an old saying on Wall Street, and it's true: things that gap up can gap back down. Well, one of the reasons why we have support is because there are people who sell and they regret doing so when a price moves higher, and they tell themselves, oh man, I'm going to buy my shares back. I made a mistake, but I'm only going to do so if I can get it for the same price I sold them at. Well, when you gap up through a level here, like here, no one sold because the stock never traded there. So if the sellers do take control and push the stock back down, when we get back into these price levels, there might not be a lot of buy orders. There might not be a lot of demand because you don't have this element of remorseful sellers trying to buy their shares back. So gaps tend to refill. There's a chance it could happen here. But we're going to watch 392 on the upside. And now we're just going to look at one more chart here. And this is the 2-day chart. Once again, it just shows you more clearly 392, how important it is. So we're going to be watching that. And just remember, we're in a market where anything that has artificial intelligence attached to the name could get overdone on the buy side or on the sell side. So make sure you check back. And that's it, everybody. And I hope to see you soon. Thank you.